Okay, all right, sir. Thank you so much for joining us. Great having you with us on Profit. Let's straight away move to the management of Biocon to talk about the quarterly numbers. Ms. Kiran Mazumdar Shaw, the CMD, is with us. Ma'am, thank you so much for joining us. First, congratulations. And I'm going to start off first by asking you about the stake sale that you've done in Syngene. It's a precursor to the IPO, you mentioned it. But, you know, the obvious question is that what kind of valuation would you be looking at? If I look at the current deal, the value comes out at about 1650, 1600 odd crores. Is that something that you'll be looking at, or a much higher valuation?
Well, you know, 1625 is really the baseline valuation. Obviously, when you take it to the market, there has to be a much higher upside to this base valuation. I think what we were trying to do through this investment is to really establish that baseline valuation so that you can really unlock the real value, the true value that we believe Syngene deserves. I think the reason why we have not taken Syngene to the market all this time is because we believe that inherently and intrinsically Syngene's value was not really being realized the way it should. Because Biocon's, at a group level, we believe the valuation is muted. And we felt that by doing this, we could unlock Syngene's valuation and even Biocon's valuation for that matter. Because we do believe that this is an undervalued stock. And I think by getting GE to invest at this level, basically establishes at least the baseline valuation.
I also believe that you've apparently initiated efforts to out-license your biosimilar insulin portfolio to partners in different markets. What's the traction on them, and what kind of development are we expecting on this front?
Well, you know, there are two efforts. One is, of course, to partner our insulins in emerging markets and rest of the world markets, which is progressing very, very well. In fact, we've had a huge traction and growth in insulin sales. In fact, we've grown almost 75% over last year in our insulins business post our parting of ways with Pfizer. And we've done extremely well in LATAM markets, in the Middle East, North Africa markets, and in Southeast Asian markets. And we are now also, with our recent announcement of the positive outcome that we've seen with our European trials for recombinant human insulin, I think this paves the way for us to actually engage with now potential partners for developed markets. So we do expect that within the next 12 months we should see a partner coming on board to take Pfizer's place in terms of our other insulins programs for developed markets. And of course, in terms of regional partnerships, we have existing partners, we have new partners on board, and I think this whole segment is extremely important for Biocon going forward, and that is why we made this firm commitment of investing in our Malaysia facility, which will expand our current insulin facility and capacity in India.
Obviously, there is some concern among analysts about the pressure on margins because of rising R&D expenditure. How do you plan to tackle that?
Well, you know, rather than calling it R&D expenditure, I think this is a very key investment for Biocon. Biocon's business model is very dependent on R&D investment. I think the markets and analysts are very used to the generics business model, which does not involve clinical trials. For Biocon, clinical trials are inherent to its R&D and development strategies. And as you get into the clinic, spends are going to increase. So this is an investment rather than an expenditure. This is an investment that will deliver exponential growth going forward. And this is an investment, unfortunately, which will keep increasing as our programs enter the clinic. But entering the clinic is also a signal of advancing these programs. So I think this is something that investors will have to get used to. Having said that, you can see that despite these increasing R&D investments, which as you can see has increased by 57% on a year-on-year basis to 79 crores this first half, the fact is that we've been able to deliver growth in both EBITDA and our PAT levels, and we have still maintained margins at a pretty healthy level. We are still at a 25% EBITDA margin level. So I think this is not cause for concern. I think investors should feel very pleased that we have actually increased our R&D spends, given that they are getting into the clinic and advancing in the clinic. And I would also like to highlight the fact that in the first half, we have not just seen R&D spends increase, we have seen our power costs increase because of rising fuel costs. We have seen our personnel costs increase because we have hired a large number of new and highly skilled personnel. We've also seen our imports increase because of the depreciating rupee. So despite all this, we have still been able to deliver a 23% growth at a group level, plus a growth in EBITDA and PAT. So I think overall, I think it has to be looked at in this context, and I think Biocon's performance should be looked at in view of the fact that R&D is extremely intrinsic to Biocon's business.
Okay. All right, ma'am. Thank you so much for joining us. Of course, hoping for a lot more innovations and, of course, lots more in terms of triggers from Biocon. Thank you so much, as always, for sharing with us the quarterly developments and, of course, the earnings performance. Value your time and your perspective. Let's move on. Let's talk about Cholamandalam. A quick comment from the management about the earnings picture. Okay, let's take a break right now. We'll come back and touch base with the management of Cholamandalam to understand the quarterly performance.